Hi guys, Lucie Warfield with Fathom Realty. Today we'll be talking about myth busting with VA loans. Hope you enjoy this. Hi guys, Lucie Warfield with Fathom Realty, and I'm excited to have Mike back with us today to talk about myth busting and veteran loans. Mike, would you like to introduce yourself?
Yeah, my name is Mike Remington, and I'm with Benchmark Mortgage. Been in the mortgage industry for about 18, 19 years, and Benchmark as a whole has a passion for serving the veterans. So it's something we really do hang our hat on.
Yes, y'all do such an awesome job. There is so much to tackle on this topic that we had a hard time just narrowing it down to a couple of things. So we're going to keep it a little bit brief today and stick with myths about VAs. A lot of times I come across veterans who don't know about the benefit or think that it wouldn't be helpful to them. So let's jump to some of this information that we're going to share with you today. So number one, the first one is zero down makes that person a weak buyer. Can you address that?
Yeah, I think that in the marketplace, when a agent gets a pre-approval letter for 100% financing, immediately they have a little bit of fear or whatever, but they really shouldn't. The veteran has earned that right and the privilege to not put money down. Just because they're not putting money down doesn't mean they don't have money to put down. They have just earned the privilege and the right to not have to put money down. And in most cases, a VA buyer is stronger than a conventional buyer across the board. The median credit score is higher than an FHA loan. It's right up there with any other conventional loan. So, it really isn't. It has nothing to do with being weak or strong buyer. It's literally a privilege. And the VA household income is just as high, if not higher, than a lot of the FHA and conventional, average conventional loans out there as well.
Definitely, and these government-backed loans are reinforced by a lot. So just looking at these two buyers, buyer A and B, and sometimes getting multiple offers, it really shows the difference. Can you explain that on this slide?
Yeah, so you'll notice buyer B there is the VA buyer, and the average median credit score you can see there is 710 as opposed to a 666 on an FHA loan. Median household income higher on the VA loan than the FHA. This is average across the country on each loan product, and you can see there that it has nothing. That the credentials are there. I think there's a pretty decent percentage of VA buyers that do put money down even though they don't have to. I think it's like 8 to 10% of VA buyers are actually putting money down even though they really don't have to.
Yeah, and if you compare that, I know I have some that compare it to the USDA. That big difference is you don't have the PMI with that VA. So
that's correct. Yeah, up front on the VA loan, if you don't have any disability rating, there is an upfront funding fee that is financed. It's not a hard out-of-pocket expense or cost to you. It is a financed fee, but there is no monthly mortgage insurance or premium on that loan, which makes the payment on a $300,000 house much less than it would on any other loan that you're putting a minimum down payment on.
All right. And so this, I know we do a lot of talking with Benchmark and just helping people, but one thing that I like is that you have in-house underwriting, and they never quit. They go to all lengths to get those clients approved with a VA loan. And it just says this here, back to the strength of an underwriter to do everything to get that approved.
Yeah, one thing I'll elaborate on that is we will use a more common sense approach on a VA loan than we may do on a FHA or conventional. I mean, there's a lot less discretion that can be used on a conventional or an FHA, whereas on a VA loan, they will let the underwriter use discretion. A lot of times it's just a matter of explaining maybe the circumstance or the situation that may have caused, a blip on the credit or whatever it might be. But there is definitely some more discretion that can be used on a VA loan than any other loan out there.
Awesome. All right. And so there's been a ton of great things that are happening with VA loans. I have a lot of times people reach out to me and they say, I would like a lease. And I start to talk to them. And one of the first questions I always ask people are you a veteran? Because I know the benefits of this loan type. And so being able to transition to these people who think that they have to lease to being able to become homeowners.
Yeah. Yeah, I mean, the minimum, there's the minimum credit score requirements are pretty low on a VA loan. The fact that you don't need any money down is a huge plus. The fact that you don't have mortgage insurance allows you afford more home and keep your payment within your reasonable budget. So
Definitely.
always worth looking. If you don't know, it's never a bad idea to just get educated on it.
Yes, and so a lot of this, just talking to a lender, seeing what they can qualify for, and part of what you do is help them. Some people say, well, I don't know if I have the certificate of eligibility. Is that something Benchmark could help someone with?
Absolutely. Yeah, we have a website and a resource that we use where we can get that within minutes. So we never ask a veteran or somebody who's applying for a VA loan for their certificate of eligibility. We might ask for their DD-214 if they're retired military, which is a form that they receive when they exit the military. We may ask for that, and with that document, and maybe sometimes even without it, we can get the certificate of eligibility. It's not that difficult. We encourage them to just let us kind of handle it on their behalf, just to kind of take that process out of their hands, off their plate.
Excellent. And so one thing that I hear, I've heard this before, is VA loans take longer to close. Would you like to address that? I love this slide.
Yeah. I don't know where that comes from because we underwrite VA loans just like we underwrite everything else from a timing perspective. It's not like it goes to a separate queue and gets put in the back burner or anything like that. We are usually 20, 40, 48 hours on initial underwrite, and that's all our loans. All of our underwriters underwrite the VA loan, and the ones that don't, it's not like it has to stick around and wait for in line to be underwritten. The one, I think, thing that might be confused out there is that the VA appraisals can take a little bit longer maybe than normal, but even still, we can underwrite a loan without an appraisal initially, so it's not going to slow us down. I mean, you see there, our average days on a VA loan is 23 days from application to close. So that's pretty quick. The national average you can see there is 48. We're 23 days, and I've done them soon. I've done them quicker than that. As long as we can appraisal within 10 to 12 days, we can easily close a VA loan in 20, 23 days.
I think a lot of people think that veteran loans across all mortgage people are the same, and I don't think that's true. People who really specialize, like Benchmark, who knows the VA, who knows the underwriting process, knows how to get these things done, really is an asset to a veteran because you can streamline this, make it less stressful, walk them through it so they have a really good experience. And I've had a lot of clients have that. So that is great. Number 4 is seller has to pay for veterans fees. A lot of times I am able to negotiate this in for my clients, but it doesn't always mean that, especially in a time like right now where we're having multiple offers and you have to compete.
Sure. Yeah, I mean, I think back in the day, it's been a while where there were non-allowable fees that the veteran couldn't pay. It's been several years. It's really not been the case. If a lender decides to charge a 1% origination fee, then at that point, so there are some non-allowable fees that the veteran cannot pay because they can't pay more than a percentage. In our case, we don't charge origination fees to our veterans, and so the fees that we would normally charge on the lending side can be paid for by the veteran. If we can get the seller to pay for them, great, but it's not an absolute requirement by any means.
And sometimes I'm seeing clients who are getting checks at close, they have credits and other things that they work out, but those are all negotiations.
Yeah, I mean, if you're getting concession from the seller, yeah, a healthy concession from the seller never hurts. And if you can get that and those fees are paid for by the seller, then a lot of times, yeah, you can get in with nothing down, nothing out of pocket, not even, not just the down payment, but not even the closing costs, as long as you get enough assistance from third parties. So.
Definitely. And one of the things that I offer with my Servant's Heart program is helping my clients. If I have a veteran with the Servant's Heart, I help them pay for that part of that closing costs out of my commission, and that makes a big difference to them and can turn those numbers really good for them. So that's a great program.
Absolutely. We
So
appreciate your veterans, Lucie.
yes, we do. It is a great honor to work with them. So this is something I come across about having only one loan. Can you talk a little bit about this?
Yeah. So you can have multiple VA loans. You have the veteran has a certain amount of entitlement that goes with the VA eligibility and the VA benefit. So in the instance where somebody has a VA loan and owns a house and does not want to sell that house, wants to keep the house, they can retain that house on a VA loan and purchase the next house with the VA benefits. Now, I can't promise or guarantee that you're going to get 100% financing on that second loan because it does depend on that entitlement. But we have several veterans who have bought two houses, have owned two houses, both with the VA benefits, and there's a formula that's used to determine what the down payment requirement is. It's bonus entitlement, and it's this long formula. In a lot of cases, you can finance two houses, 100% financing. It depends on the purchase price and that entitlement, like I said. But absolutely, you can have two simultaneous VA loans in your, on your credit or in your possession, whatever you want to call it. You do not have to buy that second house with a conventional or FHA loan just because you already currently own a house with a VA loan on it.
So if someone was to buy a house, a lot of times they're scared that they're going to be stuck, or maybe they're going to be deployed or move, and then they can't. They can always rent that house out. If it wasn't a very expensive and they haven't capped out their amount, they can also buy an additional house, rent one possibly, and move into another. There's lots of formulas. Talking to a lender who knows how that works is definitely something that's important, but to feel that they can use this asset and that is their amount that they can loan on, and it's really important. So we've covered today that zero down is a bad buyer. It's actually great. The government backs it stronger than most loans. That you have a great underwriting team at Benchmark, and so getting pre-approved up front, you can ask questions and get what they need. You'll have a great close time. VA loans can close just like any other loan. Sometimes you get ready clear to close way before, and we just kind of wait, which is a great thing to have. And I always like early clear to closes. And that sometimes sellers will pay, but not always the seller pays for everything. And that they can actually use this benefit more than once to have multiple. So I feel like we've covered a lot of great information. There's so much more. Thank you for telling us that.
Of course, it's my pleasure. One thing I'll add to that is, in the event that you sell a house that has a VA eligibility or VA entitlement on it, you can, once that entitlement renews, you can buy another house 100% financing every time if you're selling the current one. So not only can you have two simultaneous loans, but you can use the VA benefit multiple times and still get 100% financing if it's at a time.
And that loan is assumable, correct?
Yeah.
So
correct. There's some really weird verbiage with that and requirements for that, but yes.
Okay. Well, so much to learn. Hopefully we'll be sharing some more. If you know a veteran who is looking to use a VA loan, I'd love to help you out. Mike has some great insight into those loans, and take care of these veterans. We're so grateful for your service.
Yep. Thank you so much, Lucie. We appreciate your heart for the veterans and just the ability and opportunity to team up with you.
Thank you.
All righty.
So much for joining us, guys. If you enjoyed this video, please like it. Have any questions, put it in the comments. Contact me. Like and subscribe if this is helpful information, or share it with someone who you know will find some value in it as well. And I just want to say to all the veterans out there, we thank you for your service and all you do.